The only way you can kill the inflation is by raising the interest rates. And they kept on raising the interest rate. And therefore, the interest rates are not that strong an instrument for controlling the inflation.
For the second consecutive month in February, India's retail inflation exceeded the central bank's target, increasing the likelihood of additional monetary tightening even as markets assess the effects of Silicon Valley Bank's failure. According to data issued by the Statistics Department on Monday, consumer prices increased 6.44% from a year ago in the past month, although this is less than the January increase of 6.52%. Monetary policy could be a double-edged sword. One of the reasons for the failure of Silicon Valley Bank on Friday, which was followed by shutting down of Signature Bank and liquidity crunch reported by First Republic and Pacific Western Bank, is steep monetary rate hikes by the Fed over the last year. Central banks, while deploying age-old practice of raising repo rates to combat inflation, must be cautious to leave enough liquidity in the system to handle normal ups and downs of key economic activities.
This is a big inflation. And this is going to stay. The Fed definitely reacted and reacted a little bit furiously, drawing lessons from the earlier policies in late 70s and 80s that the only way you can kill the inflation is by raising the interest rates. And they kept on raising the interest rate. And therefore, the interest rates are not that strong an instrument for controlling the inflation. As a result, what you have seen is that in last 15 months, there is very little impact on inflation and or employment for that matter, whereas the interest rate has kept on going up. I've been raising this, that time has come where we should actually revisit our theoretical as well as strategic concepts that does the central bank's interest rate play that much part in the inflation management? Because today there is more of asset price inflation, asset price increases which are more significant than the goods or the services inflation.
In the US just days ago, Federal Reserve Chair Jerome Powell hinted that larger rate hikes might be resumed if inflation continued to be persistent. The sudden eruption of financial strains in the US following the closures of Silicon Valley Bank and Signature Bank prompted traders to reduce their bets on a rate increase this month. In India, over half of the inflation basket is made up of food prices, which grew 5.95% from a year earlier, while fuel and light prices rose by 9.9%. Housing prices rose by 4.83%, while clothing and footwear costs surged dramatically by 8.79%, maintaining high core prices. For the 17th consecutive month, core inflation, which excludes volatile food and fuel prices, remained above the 6% threshold. Since May 2022, the RBI has increased the policy rate by 250 basis points, bringing it to 6.5%. If it were to rise further to 6.75%, the repurchase or repo rate in India would reach its highest level since February 2016. India has begun to feel the effects of RBI's policy tightening. With lackluster GDP growth in the 3 months leading up to December, 2 of MPC's 6 members called for a halt in February to ensure that the economy doesn't slow down as a result of the growth-inflation trade-off. With no serious drop in inflation despite multiple repo rate hikes, the question remains whether raising repo rate is the only valid method to handle inflation, or more of a reflexive overhang of monetary policies that are based on economic realities of the 80s.